Welcome to our training tonight on July the 19th, July the 19th, 2018. My name is Alvin Kerr. I'll be your host tonight. We're going to be training tonight, as you can see from our schedule tonight. You can see this. We're going to do an online training, so you should be at acurrytraining.com so you can see what we're doing. We're going to do the W-4 withholding calculator. As I travel around this country, many people are still using the paper version. We're going to put the paper version up tonight to refer to it. I want to show you then how to transition to the online version. So let us get started tonight with the paper version. So I want to go first to a single person, and I want you to look at what we're going to use here. So we're using a single person tonight, just so you know. This person, we'll show you the specifics in just a moment. And it says right here, complete Form W-4 so your employer can withhold the correct federal income taxes from your pay. Consider completing a new Form W-4 each year when your personal financial situation changes. Everyone has heard that if they've been around us at any length of time, according to the I.R.S., not according to MyEcon. So now if you look here at the notes right here in the center, it says notes. If you have too much taxes withheld, you will receive a refund when you file your tax return. If you have too little taxes withheld, you will owe taxes when you file your tax return, and you might owe a penalty. I want to go to box C, head of household, which is what we are going to use tonight, single head of household. Generally, you can claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost to keep up a home for yourself and a qualified individual. See Pub 501 for more information about filing status. And then we come down to line E, child tax credit. When you file your tax return, you might be eligible to claim a credit for each of your qualifying children. To qualify, the child must be under the age 17 as of December the 31st and must be your dependent who live with you for more than one half of the year. To learn more, keep going. Now, we're just going to skip on down to line F here. Credit for other dependents. When you file your tax return, you might be eligible to claim a credit for each of your dependents that do not qualify for the child tax credit, such as a dependent child age 17 and older. All right, so here is, we're showing you right now what a W-4 look like. I am amazed because many people I talk to, they don't know this. I mean, I guess I shouldn't really be amazed, but I am. People don't pay attention to the forms they're signing. Many times they're excited about getting a job, and they just go ahead and sign whatever forms are put before them. I know I was that way when I was going into the military. I didn't read all those forms. I didn't know what they meant. I just kind of signed them. Now, but once I got out, I asked the people, what does this mean? And they told me I just put one on there for me and one for my child, so I had two, and my wife had two on her. This is a W-4 withholding allowance. This is the Department of Treasury, Internal Revenue Service. You can see that in the top left-hand corner. Now, you fill out line 1 through 4. This is just personal information. And then line 5 says total number of allowances you are claiming from the applicable worksheet on the following page. Now, disregard the number 12 here because we're not filling this out manually. This is when I fill it out manually. Now, right here in the center, it goes on to tell you about filing for married. We won't do that right now. And I want you to write this down if you are keeping up with me here tonight. We have a single person with an income, one income of $60,000 a year income. They have two children, ages, they're 10 years of age, and they are 10 years of age and 13. So it's very important that you know that the children's age here and what's going on with them. So it's very important when you're filling this out that you understand that you must have the children's age. So that's the important thing as it relates to that's the important thing as it relates to what we're doing here. So we have a single parent with 2 children that makes a head of household. The children are 10 and 13. Remember, it said if they're 17 or older, they make $60,000 a year. So we want to note that. A child tax credit, if your total income will be less than $69,801, what's the total income? $60,000, so it is less. So they qualify for a child tax credit. Okay, so then we come on down, and we're going to look at some other things I want you to write down. I want you to write down that this person is a standard filer, standard deduction. They have $18,000 in standard deduction filing for 2018, and they just started their home-based business this year. This is the single filer. I want you to remember that. Now, I want you to come with me as we go to the I.R.S. calculator. So what I do is I just come to my website here, and I type in IRS.gov and enter on my computer. That brings me to forms and instructions. I click on forms and instructions, and I scroll down till I get to W-4 withholding calculator. Right here is W-4 withholding calculator. Now, you should, if you have not read all of the information here, read this information and what it's going to tell you. Some things like this. Plan ahead. It's going to tell you need the most recent pay stub, have the most recent tax returns handy. Okay, and a completed copy of your 1040 will help you estimate all of the things we need to talk about on here tonight. So those are things that you need to know. Now, understand something, ladies and gentlemen. I do not have a pay stub. So for this single person, I need you to follow along with me, and I need you to write this down. I am going to estimate that they had $6,000 taken out of their check for taxes. That was $6,000 per year. We're going to divide $6,000 by 24. They're going to get paid every other. They're going to get paid twice a month. So we have $6,000 divided by 24. That's going to equal $250 per week coming out of their check. So we're going to count the number of $250 per pay cycle. They get paid twice a month. 24 pay cycles, and then twice a month. If you get paid every other week, every 2 weeks, every Friday, then that would be every other Friday. That would be 26 pay cycles in a year. So if we take 2 pay cycles in January, 2 in June, if we're assuming the 1st and 15th, 2 in February, 2 in March, 2 in April, 2 in May, 2 in June, and 2 in July. That's 7 months. So we've had 14 payments times 250. So if I take 14 payments times 250, that will equal $3,500 in taxes paid in year to date. Okay, I need you to write that down. So here's what I want you to write down, because we're making up a pay stub. That's what we're doing. On your pay stub, you would be able to see a person's income for what their income is. This person's income is $60,000. So then on your pay stub, you would be able to see how much taxes they have taken out year to date. You will be able to see how much they take out per pay period. We don't have the luxury of that since we don't have a pay stub. So I'm going to assume $6,000, 10% of $60,000 is $6,000 was taken out for taxes. I'm going to assume that we get paid twice a month, the 1st and the 15th of each month. So I would divide $6,000 taken out over the course of a year by 24 payments. That will give me $250 per pay cycle. If I have 14 of those, because I have 2 in January, 2 in February, 2 in March, 2 in April, 2 in May, 2 in June, and 2 in July already, I will have 14 cycles that I've had the $250 taken out or $3,500 taken out. Now, you're going to see why that's important here as we prepare. Let's go to the calculator and continue to move forward. Now, so that you can see this a little bit better on your screen there, I am going to go ahead and make this a little larger. We're going to file as head of household. Says, can someone else claim you as a dependent? The answer to that is no. If you had a child under the age that you would file that was on your tax return at home and they were working, they wouldn't claim themselves. You could claim them. That's what that means. But an adult who have children, no one else can claim them. So we continue on here, and no, we're not going to give any feedback. All right, so now what we're going to do here is we're going to answer these questions. Select the total number of jobs in which you are currently or will be employed. That is one. We said on here one. I need you to note, enter military retirement pay or taxable pension as an additional job. So if I'm talking to someone who's retired from the military and drawing retirement disability where it's non-taxable, listen what it said, taxable pension. So if you were getting a non-taxable income, you don't have to do it here because we're trying to figure out how many taxes that we have withheld and potential taxes you're going to owe for the end of the year. So a person that's a retiree from the military, that is considered one job. If you work another job since you're retired, that is a second job. If your spouse works a job or two, that's a third and perhaps even a fourth job. So if you have a MyEcon business, that's not what they're talking about here. They're talking about W-2 jobs. W-2. And on your W-2 job, you turn in a W-4. Now, we're going to check these boxes as appropriately here. Check box if you held a job this year but are no longer employed. That means if your job, you had a job around the first of the year or sometime during the course of the year and you were fired. Well, that's not the case. Check this box if you contributed to a deferred retirement plan such as a 401k plan, 403 plan, thrift savings plan. We didn't say that they did, so we're going to leave that box not checked. Check this box if you contributed to a cafeteria or other pre-tax plans such as health insurance this year. I want to show you how to determine that. Click on that link, and that link brings me up, and it shows me what the cafeteria or other pre-tax plans are. It is things like coverage under accident health insurance plans, other than long-term care, coverage under dependent care, assistant plan. There's things like premium on COBRA, accidental death and dismemberment insurance, long-term and short-term disability care, health savings accounts, flexible spending arrangement. You see many people have flexible spending arrangements to do this. So, and they're taking out their paycheck. You have to spend them up before the end of the year. We're going to not check anything since that's not applied. Check this box if you receive a scholarship, fellowship grant this year that must be included. We're not going to say anything there. Then we're going to say select the number of dependents you will claim on your taxes. This person has 2. We're going to select 2. You are not 65 and older. You are not blind, so we're going to move on down. And we do not have daycare. If we had daycare, we would put daycare in here, but we do not have daycare. When you start talking about dependent care, that's what you must understand. Is it work? Is it children that you have to have taken care of? If there's an extra activity after school, that's not what they're talking about. So we then got the child tax credit. Remember, the income is qualified in here. So we're going to put 2 in here. If the 17-year-old was here, we would put 1 in this box because it says the calculator says it would determine the non-child dependent credit for you based upon the total number. So it knows up top we put in 2 children, and if we put 1 here that was qualified, meaning they was under 17 and the other was over, it would then take in consideration that automatically. Earned income tax credit, we're not going to put anything in that box. We're going to come on down, and so we're going to then just come to continue here, and we're going to continue. So now we come to the withholding allowance. This is where it's very important that you have the pay stub. So it says enter 0 in any amount that does not apply. Enter your gross wages, salary, tips. This is what will go on line 7 of your 1040. If you look at your pay stub, it will tell you what's your gross that you expect to receive. So we expect here to receive $60,000 here in income over the course of this year. Any bonuses you expect to receive in 2018, that is zero. We do not expect to receive any. Now, look at this question very carefully. Enter the total federal taxes withheld to date in 2018. Now, the total federal taxes withheld to date, remember we said you had $6,000 withheld for a year. We divided the $6,000 by 24 payments, meaning we're going to get paid twice a month. That gave us $250 per payment period. We've had 14 payment periods, which is now $3,500 that's going to be that. So remember the question. See what it says? The total federal income taxes withheld to date in 2018. Withheld to date. All right. The federal income taxes withheld from your last salary payment. Well, that's pretty simple. If we're doing $250 a month, per pay cycle was $250. Then it says select how frequently you are paid. We select how frequently we are paid twice a month, not every 2 weeks. Every 2 weeks constitute 26 payments a year. Twice a month is the 1st and 15th. Then we're going to leave the select the date closer to you first held this job in 2018. We January 1st select the date. When you last held this job in 2018, we'll say December the 31st. Makes sense. Now, when you come down here, we're going to talk about what is taxable income a little bit later on, but I'll just tell you right now, if you make a profit in MyEcon, then the profit in MyEcon will go right there as taxable income because it is taxable income. However, if you lose money in MyEcon, then that's going to come down here to adjustments to income. Just like on the paper app, we would write in there $4,041, $41.50. I'm sorry. So in here, we're going to put $41.50 as our adjustments to income. When we look up here, non-wage income, and the total amount of other taxable earned income. If we made a profit, we put that number there. And any unemployment compensation you receive, we don't have any there. An estimate of non-wages, remember that is for people who have great investments, make a lot of dividends and stuff like that on that line. So we're not going to put anything on these three lines. We're going to put $41.50 on the adjustment because we said the person is new to MyEcon, only been in the company a very short time this year. We're not going to put $25,000, $30,000 of deductions there. You will help them to make false statements that they may or may not be able to make if you do that, ladies and gentlemen. So what we're going to do now with deductions, we're claiming her as a standard deduction of $18,000. We're not going to do the itemized, so we're going to just come right on down and hit continue. As we hit continue, we are now completed with this form, and this form tells us really simply this. Okay, results based on the information you previously entered. Your anticipated income tax for 2018 is $273. If you do not change your current withholding arrangement, you will have $6,000 withheld from your 2018, resulting in an overpayment of $5,727 when you file your return. If you want your withholding to more closely match your anticipated taxes, adjust your withholding on a new Form W-4 as follows. Now remember, we already showed you a W-4, so if the W-4 you have at work is paper, it will look just like the one I showed you. If they have it online, it will be some derivative of this because it has to follow consistently this to get an accurate result. So it says for the only job you entered, which has a projected salary of $60,000, 14 allowances. So you then check the single box on your Form W-4. So on line 5, you would have a box on there that says how many withholding allowances? 14. Not yourself and 2 children, which is 3. Now I want you to look at something. Based on the information you enter, look at the next paragraph here. If you file a new Form W-4 for the rest of 2018, your expected refund to which you may be entitled to should be about $32.25. Why is that? You've already paid in $3,500 already into the system. Remember how much you had paid in, so you overpaid already. So you're going to get all of your money back on a monthly basis, that $500, that was being taken out of your check, plus you're going to get $3,250 back for your taxes. Follow the recommendation, file a new Form W-4 to ensure that the amount withheld from your wages will cover all of your projected tax liability and minimize your refund. So, ladies and gentlemen, that is a simple process. Now, the bottom down here just kind of summarizes what you put in and lets you know what you put in. But, hey, ladies and gentlemen, that is an absolute simple little deal to do if you work at getting it done. Now, if you don't work at getting it done and work at practicing it, you won't ever get it. Most of you or many of you on here, I won't say most, many of you on here are single parents. And so I did this because I wanted to show you how a single parent works. Now, the next thing I want to do is I'm going to go to a married couple. I want to start over here. So I'm going to clear this out, and we're going to go back to our file here. We're going to pull up a married couple. This time, our numbers that I want you to write down is married. I want you to do, we're not going to read all these boxes. We read them before. They mean the same thing. Again, this is a withholding certificate. Line 5 is what we're going to be filling out when you turn this in. You put in your basic information up top, and then your line 5 is what's going to determine how many withholding allowances you have. Now, on the paper app, it says, on the paper W-4, it says, figure the total number of withholding allowances you are entitled to claim and any additional amount of tax to withhold on your job. Use a worksheet from only one Form W-4. Claim all allowances on the W-4 that you or your spouse file for the highest paying job, for the highest paying job in your family, and claim zero allowances on Form W-4 filed for all other jobs. For example, if you earn $60,000, per year and your spouse earns $20,000, you should complete the worksheet to determine what to enter on line 5 and 6 of your Form W-4, and your spouse should enter zero on line 5 and 6 of his or her form. See Pub 505 for detail. Now, we're going to come down, and we're going to add this in writing, okay? We're going to have a married couple. They're going to have two incomes, $60,000, and we're going to have $40,000. I want you to write that down, $60,000 and $40,000. They have two children, aged 13 and 18. Very important that you note that. For a married couple to claim a child tax credit, their income need to be under less than $101,400. Is their income less than $101,400? The answer to that question is yes. So we need you to see that. Now, the other thing we want you to do is we want you to know that this couple is going to itemize this time. They have 3 years on a home-based business, so they have a track record to follow. So we're going to look at their Schedule C and their itemized deduction. But let's figure their taxes first. So we know on the $60,000 a year person, 10% of that is $6,000. And we know if you divide that by 24, that is $250. And then if we got 14 cycles, we know that that equals to $3,500 paid year to date. However, on the $40,000 person, we have $4,000 of taxes taken out. We're going to take $4,000, divide that by 24 payments, and that's going to equal 166.667. So we're going to round that down for even numbers to 160. I know it is 166.66. So we're going to make that 160 per filing cycle. We're going to time that time 14, and we're going to take 160 times 14, and we're going to get 22 40 here. So that's important that you know. I rounded down on this for tax purposes. All right, so let's move on to our filling this out and completing this. Now, I want to show you a couple of things here as we relate to this, okay, that where we're going to get some numbers from. I want to show you the Schedule C. The Schedule C right here says, Schedule C, this because they have a home-based business for 3 years. We can look at their taxes. When you look at their taxes, you will find a Schedule C in their taxes. If they've been filing taxes for 3 years as a home-based business, when you pull up, remember it says you need last year taxes as well as your pay stub. So if you pull up last year taxes, you will see a Schedule C, Form 1040, Department of Treasury, Internal Revenue Service, profit or loss in there. So when we come down and read this, it says income on Part 1, line 7 is $5,000. Then it comes down to expenses. These are the expenses we teach people in MyEcon to take. We teach them to take car and truck expense. We teach them to take interest expense, depreciation. We teach them to take things like travel, meals, and entertainment. Well, we can't do entertainment anymore this year, but travel and meals you can still do. We teach them utilities, and we teach them wages to their children. So you will note line 28 adds all of the expenses up, and line 28 says that they have $25,000 in expenses. Line 29 says you subtract line 28 from line 7. If I subtract 25,000 from line 5, that will give me a number of negative $20,000. So I lost $20,000. We will talk to you about that in due season, how this works. But for right now, we just want you to see this process. And then we do these classes chronologically so you can keep up with us, but just understand that we can't get into every detail tonight. Now, the other thing we said they were going to do, they was going to file itemized. I need you to go along with me on this, okay? Now, itemized, if you look at their taxes, they will have a Schedule A in their 1040. If they are a home-based business, that was a Schedule C. A itemized deduction for ebonically speaking people is, do you file long form or do you file short form? If you file long form, then you would file what they call itemized. If you file what they call short form, then you just file what's called a standard deduction. So we here in this class, we're going to do itemized. Now you can see, just for benefit of this class, I have a Schedule A up here. We have $1,750 for medical expense. We have $47.50 for taxes you paid. We have $11,000 for interest you paid on the mortgage, and we have $10,000 tithes and offering. These are expenses that goes on a Schedule A. So now we come down to line 29 on the Schedule A. All right, we see they had $27,500 on the Schedule A. Let us go now back to the online W-4 withholding calculator. This time we're going to file married filing jointly. They have no one else can claim them. And then we're going to do continue. Now, as we continue, we want to say how many jobs do they have? They have 2 jobs. We're going to come down here and show that they have 2 jobs. We're not going to use any of these things, even though they may have them. But if they do, they can do it from looking at their pay stub to tell them what they have. Select the number of dependents you will claim. We can claim 2 dependents. So now as we come down here, we're not blind, we're not 65 and older. Dependent children, none of those are we going to collect because they're not in daycare. But select the number of qualifying children talking about for the child tax plan 1. And remember, they have another over 18 that the computer will take in consideration. So now we're going to come down to, okay, now let's look at other credits here. Okay, we're not going to enter any other credits. We're not going to enter other qualifying insurance here. So we're going to continue. Okay, now we get over to the job side here, Well, we're going to start putting in information about jobs. This person has a $60,000 a year job here. They have on the second job a $40,000 a year job. They have 0 here for bonuses and 0 here for bonuses. And then we have federal income taxes withheld to date. I need you to remember how we derived at this. 10% of $60,000 is $6,000 divided by 24 payments or 26, but in our case, we're using 24 payments. That person divides that, they come with $250. And then if they multiply out 250 payments times 14, 2 payments in January, February, March, April, May, June, and July. You come up with 14 payments. So now 14 payments divided by 250 is $3,500. So we're going to come out and put $3,500 in this box. On the next one, we took $4,000 divided by 24 payments. They gave us 166.66. We round that down to 160, and then we took 160 times 14, and they gave us 2240. So we're going to put in here 2240 on this box. Now they have how much taxes was withheld from the last pay stub here was $250. And how much taxes over here, since we do 160 each, we're going to say 160 and 250. They get paid on a twice-a-month basis. If you were getting paid once a month, you can see this. If you pay weekly, you can see it. So we're going to do is say twice a month. They're done. And now this is the same. They had the job on January 1st, and they expected to have it on December 1st. Now, I need you to see this, ladies and gentlemen. I really want you to see this here. I'm going to go back to this. I want to come back to this right quick. I want to show you something. On the Schedule C, if they had a profit down here on line 29, line 29 is a negative number in this case. But if this was a profit on line 29, then what they would do is go to right here where it says other taxable income, and they would enter that number if they had a profit on line 29. However, since they do not have a profit on line 29, we're going to go to adjustments to income, and they had a $20,000 loss. Now, folks, I only show you this because someone has a rumor that I tell people to take $20,000 loss. That is absolutely untrue. I said to you, if they have been in the business less than a year and they do not have a Schedule C, then we should not take before the $150. If they have been in the business for 3 years and we can see a track record by looking at their Schedule C, that they discipline themselves and they follow the rules and they have legitimate losses of $20,000, then we can put that in that box. And that's what I did here. So I need you to follow with me, and I need you to play the whole video when you start telling tales about what Alvin said. So in this case, they have 24,000 married, but this person's itemized. So we're going to see here, we're going to put 1750 in that box. Remember, I showed you a Schedule A. Let me go back for those that got on late. I have a Schedule A here, and in that Schedule A, just so we all are familiar, we have on line 4, 1750, on line 9, 4750, on line 15, 1150, and 19, we have $10,000. That adds up to line 29. That adds up to be $27,050. So we're going to put on your taxes paid, we're going to put here $4750. On your interest you paid, we're going to put $11,000, and on your charitable giving, we're going to put $10,000. Now, if you add that up, that will come to the $2750 that we had on the Schedule A. The only reason I went to the Schedule A is I want to show you an example of one that's completed. The completion amount is more than the $24,000. If you fill out a Schedule A and your completion amount was $12,000. Well, you're going to get 24 here. You'd be better off to take the 24. However, they still get the 24, and they get to take the itemized deduction. I'm sorry, they don't get the 24. They get the 27.50, which is more than the 24. So we're going to stroll down because they get the 24 here. So we got 27.50. I'm sorry, they do not get the 24. We're going to continue. Now, once we continue, this has brought us up some very interesting information here. Let us take a look at this. Based on the information you previously entered, your anticipated income tax of 2018 is $3,632. If you do not change your withholding arrangements, you will have $9,040 withheld in 2018, resulting in a $5,408 refund when you file your taxes. If you want to closer to model what you're doing, then you can go ahead and change your W-4 as follows. Job number 1, which has a projected salary of $60,000, 12. Job 2, which has a projected salary of $40,007. Now, remember on the paper W-4, it said you should put all of them on one W-4. Here, the machine or the calculator is saying put 12 on the one with $60,000. They'll take care of all of the taxes being taken out of that person's check. 7 on the one that's being $40,000. They'll take all the tax on that side. So if you, based on the information you entered, if you file a new Form W-4 for the rest of 2018, your expected refund will be $2,100. Now, I want you to understand something. Why is it more here? Well, first of all, they have more taken out. And you can see the calculator recommends more than we had on the paper. Folks, this, in my opinion, is a better use of your time, a better avenue of your time, and everything. So, here's the challenge to you, ladies and gentlemen. You look down here, all of the information is what you put in. If that's your information, if that's right, then this should be right also. So what we've done tonight is we've gone through how to do a W-4 for head of household, which a large percentage of the people in MyEcon fits into that category. A large percentage of the people fits into the category where we have head of household, which is a single person with a child living with them. And then we have a large percentage of the people in here, business, that are married. That is people who are married and file joint tax returns with their spouses. That's me and many other people in our company here. So what we did is we went over both ways to fill this out. This is recorded. I will post this tomorrow, so it'll be out here for you to study and take a look at on how to do it. I showed you the paper forms so you will know how to follow along and fill this out. Ladies and gentlemen, if you want to know how to do this, my suggestion to you is to get your pay stub and your 2017 taxes and then sit down and fill this out on you. So if you're married, get yours and your spouse, and sit down and fill this out on you and your spouse. If you are a single person, sit down and fill this out on yourself. Look at your taxes. Do you have a Schedule C from last year? Do you have an itemized from last year? If you do not and you're going to guess, I suggest that on the adjustments to income that you only guess at $41.50. If you don't have it itemized, I suggest you leave it at $24,000 for the itemized deduction and just take the standard deduction. Ladies and gentlemen, this is a simple process. If you will practice it, you will get good. You'll be able to talk to folks right on the phone and do this with real simplicity. This is a cornerstone of what we do. I want to say this, and then we're going to take questions. This is the first step in our income shifting membership. I talked to you last week. I said we were going to go through this income shifting membership, and we're going to analyze it step by step. Many people believe that this in and of itself is income shifting in totality. It is not by a long shot, ladies and gentlemen. This is not income shifting all by itself. This is just one place you shift income. So we're going to show you the other places you can shift income. So now when you change this W-4 on this married couple taxes, remember they had $500 coming out of the taxes for the one couple, and then they had on the other couple they had 160 times 24. They had the taxes coming out there now. So you can see that these couple here was going to be doing $3,840 plus $6,000. We have over $9,000 of taxes taken out. Yet when they make these changes, they'll get all of that money back. The $160 per pay period will come back in their check. The $250 per pay period will come back, and they'll still get a refund because we're doing this past the middle of the year. So therefore, since we're doing this past the middle of the year, we will see how this works out. So now what we're going to do, ladies and gentlemen, is we're going to take questions and we're going to run through the questions and see what's going on for people having questions here. So I want to thank you for being on the call tonight. If you are satisfied with what you have heard here tonight, then what I need you to do is, what you can do if you like, stay on if you want to, or you can go ahead and hang up, and what we will do is we will take the questions from the people who have questions tonight. So if you have questions, please let us know what your questions are. Give me a minute to turn the recording off, and I thank you again for being on the call with us. We will talk to you again if you have no questions tonight, but if you do have questions, stay on the